Good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, November 22nd, 2021. Very interesting day today. The NASDAQ did push higher initially after the in Globex, and in the opening of the US, the market got very close to 16,800, reaching a high at 767. That could have marked the high of our long-awaited, long-term advancing sequences. And I have marked it as the ending point for minute 5 and then the minor 5. But that's as far as I'm going to go right now. And I've left our next resistance zones in place, which would mark additional moves for the minor 5th wave. Now, what I am now looking for to give me confirmation of the possibility that this is the completion point for all of those advancing sequences, and I wish my mouse and my computer would get it together. So I am sorry for all these disturbances in delivering my messages. So what I can look at is here, this initial decline. So there we have the high, and then we started to decline pretty much immediately after that high. But it looks thus far, we have a 1, a 2, and the start of a 3. Because the 1 is actually pretty long. We go from 767, and it ends down here at 455. So we're already 200 plus points. And if I had to measure the third, it's going to reach the high at 598 and a low at 664. So that's still 200 plus. So it's a stretch, but at best, what I can count right now is 3 waves down. So if anything, it's 1, it's 2, a 3. We have a little 4, and then a 5 wave down. So what I am looking for is that initial 5 waves down, but I'm not going to break any rules to get it. So if we remember, wave 1, wave 3, and then wave 5, one of them will extend. Most often and quite normally, it is the 3rd wave that will extend and be the longest of waves 1, 3, and 5. That still has to be in place. Right now, it still looks like wave 1 is going to be the longest, and wave 3 should maybe put a little bit more additional. If it doesn't, I will then be paying very, very close attention to what wave 5 will look like. Now, having said that, what I'm going to be looking for is that initial 5 waves down. And right now, we have support at 16,336 and then also 303. So basically, we have it at 336 and then 300. And that may contain the 3rd wave. And then we get a little bounce, and then we come down again as we start to put in this 5th wave, which I'm hoping it will do. And that's the one that I'm going to anticipate that we will have support right here at about 16,000. But again, we will have support coming off at some different points. One thing that I can do is put in some retracements of just this 5th wave. So if this minute or minor 5th wave, let's just put in some retracements so we can start to gauge the depth of what we will be looking for. There you go. So what we're looking at is, again, here we have a little double up here at the 16,332, 330 area. Then we have it at 230, not 330, 230, 154. And then it breaks very quickly with a lot of black holes right here. I mean, we have price support. I'm going to say it's 1604. We have some more price support at 82. And so I don't think it's just going to drop off the face of the earth prior to, finding its low for this initial 5 waves down. But I think that what comes into play is 15,090 down to 86-ish, or down to 90, excuse me, 15,896 to 15,090 approximately. That should provide enough support to contain this first initial 5 waves down, if that's what the market is going to be doing, and then set the stage for another 3-wave rally. And it should be substantial. It should be very tradable, and really fool people that that was just a folly, and all of this is going to just continue. We're just going to plow back higher. Now, having said that, if this gets left as 3 down, then for sure we're going to be looking for this market to break above this 200 moving average at 466 right now, break back above the 8, break back above the 20, break back above the 50, as it continues to build its way back up to new highs, which I have left in place of where it can go. We have 828, we have 17,050, 17,209. So we still have numbers way up there. But this first one, 16,828, I thought they were going to hit that today. I really did. But the way that they were just coming in and buying it this morning, I thought, well, that one's should be a done deal. But it stopped short and turned. So I still think that we have to leave that possibility, which is why I'm not filling in the blanks going 5 or 5 or 5 just yet. I want confirmation from the market that is going to be the stronger option, that the rallies are done and we're into that long-awaited, longer-term corrective phase. So for tomorrow, I think that what I'm initially looking for is probably a little bit of a continued bounce. We got the 1 hour. Let me just open this up. Come on, computer, please don't. Good, I can do it from here. We have the 30-minute 4 at 425. Then we have the 200 at 466. We have the 8 at 479, and we have the 20 at 538. I do not expect this 4th wave to come above that, which is going to be right there, 455. I would not expect it to come above 455. If I'm counting this as wave 1, this is wave 2, and this possibly is wave 3, I wouldn't, it cannot overlap the price territory of wave 1. So we have a pretty low bar in terms of how high the market could get. Anything above 455 starts to swing the balance back towards a continued ground. Okay, downside initially 330, 230, 154, 15,896, right there. And then we'll look for that to complete that initial 5. But if this third is going to extend, which it could, then maybe it'll just contain the third. Then we get another little rally, and then we get another drop. We'll all be, we're going to allow the market to tell us. I'm not going to forecast. I'm not going to say this is what's going to happen. That is not useful. What's useful is what are our possibilities and probabilities for tomorrow. So upside, I think, should be limited. A break above 455 does set the stage for a little bit stronger upside. I still could be counting it as 1, 2, 1 of 3, 2 of 3, 3 of 3. So there's still a lot of different ways, but if this is the end of the third, I'm looking at a 4th, it cannot break 455, 16,455. If it does, it just takes that away, that this is not the end of the third, but maybe it's just the wave 1 of the third. And then we can look for stronger moves up to 466, 479, and then 538, all in a wave 2. And then another quick dip down. So we're going to wait and see. There's a lot of going on. It's a holiday shortened week. Many traders, I believe, are already planning on taking Wednesday off. And then also on Wednesday, we have a slew of economic figures because it is a shortened week. So we have, before the market opens, we have jobless claims, we have GDP, we have international trade imbalances, and we have existing home sales, all in the past and still are market movers. It's important data, and it could move the market very cleanly and very strongly in either direction. We have additional numbers coming out once the market opens that also can really add to a directional push. So let's trade smart. Use the moving averages. They have guided the trades today. Continue to understand that, even on this 30-minute chart, when it broke the 50, it accelerated. When it broke back up and it couldn't hold it, it started to accelerate back down. Then when it broke below the 20, it accelerated. Broke the 8, accelerated back down. Broke the 200, it accelerated. These points, being the 50, the 20, and the 200, produce an extra push. It's breaking a support level that's been provided by a moving average. And that adds to sell or buy pressure, depending on the direction. Can add to the pressure to the move, to the direction of the move. So continue to use those. Use the support, the Fibonacci support and resistance, and then use the Elliott to what we're looking for. And I wish everybody a very good trading day tomorrow. And the next update will be on Tuesday, the 23rd.